Hi, this is Bastian from Global One Media, and today this is our first episode of our market update series, where I discuss with our business analyst Munir about the current situation of the market. Hi, Munir, how are you today?
Hi, Bastian. I'm good. How are you?
Good, good, thank you. So, Munir, everybody's talking about this right now. Are we in a recession, or is a recession coming soon? And how do you see the situation from your perspective?
Well, there are certainly many indicators showing that we are nearing a recession. It's not up to me to call it a recession because there are organizations that are responsible for that. But generally speaking, the situation does not look very good. Many global institutions, like the World Bank, have downgraded their forecasts about global growth. The OECD has also downgraded its forecasts. Some are actually predicting a stagflation, which is a combination of slow growth and inflation. And I mean, if you want to look at it from that perspective, inflation is really one of the biggest issues right now. Uh, and I think that is one of the biggest concerns for investors right now. In the US, the inflation is right now about 8%.
Right.
And that is prompting the Fed to hike rates aggressively.
Mm-hmm.
And in China, you're seeing that you're seeing a slowdown because of the very restrictive COVID policy. And let's not forget that the growth in China impacts growth in surrounding countries, because China has been an engine for growth, not for only itself, but also for other countries as well. In Europe right now, the winter is approaching and energy
Right.
prices are high.
Yeah.
And there is the war in Ukraine, and you have the ECB. Christine Lagarde has recently talked about quantitative tightening
Mm-hmm.
after hiking rates, which can actually depress companies' profits, since this environment, this tightening environment, is generally not that great for
Mm-hmm.
businesses in the overall. And so, I mean, I wouldn't call it a recession yet, and it's not up to me to call it a
Yeah.
recession, but it generally does not look very good in the market.
That's a pretty bleak picture, Munir. What
It
what do
is,
you think?
unfortunately. Yeah, unfortunately, it is. I wish I I had more positive things to
Right.
say, and there are, I mean, some positive things happening, but in the overall, this is a lot of people are linking this to COVID.
Mm-hmm.
And but the way I see it is that what we're seeing right now is the end of the free money era. Interest rates have been low for a decade or so,
Yeah.
and companies have become used to getting debt at very low rates,
Mm-hmm.
so they could secure capital at low rates, and that can encourage business growth, but it's generally more risky. And so, in during the pandemic, governments have spent so much money in fiscal stimulus to support
Right.
their economies, and that is one of the drivers of inflation, by the way. And so and so to offset inflation,
Mm-hmm.
for those central banks to fight inflation right now, they're hiking rates. And in addition to the rising cost of living on consumer, that is also a force that is squeezing companies' earnings. So, and all of that, all of that fiscal spending
Mm-hmm.
um, is feeding into inflation, the way I see it. And I think eventually it's companies that will have to pay for it from their uh, from taxes, because the I think at some point taxes might be increased to offset this fiscal stimulus.
Right, and I assume that the added tax burden won't help equities, right?
No. It will definitely squeeze companies' earnings and liquidity, and households also are facing rising costs of living. So you're seeing factors that are not very good for growth in the overall.
Right, but is there a cause for optimism, Munir? I mean, how do you see equity markets performing in the last quarter of this year, 2022?
Well, I believe that we might see a turnaround if inflation figures go down, because then this will prompt central bankers to go easy with their hawkish policies. I would recommend that investors look at inflation rates. I would recommend that they look at unemployment figures, especially in the US, because the Fed will be looking at that to guide its policy, monetary policy.
Yeah.
And so I think if unemployment starts going up, which is not really good for for the society, but it's generally an indicator that the Fed uses to guide its policy. One of the indicators. If unemployment goes slightly up, and if also the investor sentiment improves, then we might be seeing a turnaround. We might not see it in the upcoming quarter, the last quarter of 2022, but it might happen next year, sometime around next year. I would actually keep an eye on the fear and greed index. It's now, I think, pointing to extreme fear, and hopefully the fear will gradually become reduced, and then hopefully we'll see a turnaround in the market.
Yeah, no, let's hope so. And look, thanks, Munir, for sharing your perspective. And we'll talk again next month about the developments on the market.
Thank you, Bastien.